Morning, people. What's up? Hope everything is good again with the audio and the video. We are back at it. It is Wednesday, July 17th, and we've seen a pretty interesting market movement right now. S&P trades into all-time highs yesterday, and we also have new highs of year on IWM and all-time highs on the Dow Jones. So what's going on? Because what we're seeing over these past few days is that money's flowing out of big tech, out of a lot of these larger sectors and these larger indexes like the Nasdaq, and flowing into things that have been neglected. So it was only a month ago, right, that we pointed out that potential sector rotation. We were looking at that, especially in what we've got here, right? In Discord, for example, we've seen that this was June 16th, right? Time to be looking for gold, silver positions as well as IWM and DIA. So I was looking for signs of caution on SPY and triple Qs while looking for the long side in the more neglected sectors. So, and that's what we got. We finally got this pop. We could be a little exhausted on these right now, so I'm probably just going to be cutting positions and walking away for a bit, as we're still looking for a little more downside in these other equity markets like the SPY and the triple Qs, mainly in tech, trying to come back after multiple extensions of all-time high pushes. So we've seen a broadening of a rally that was supercharged originally by mega cap tech stocks, and increasing rhetoric surrounding the Fed rate cuts has also ignited excitement about the lending and growth environment for smaller companies. While the Trump trade has put a focus on other parts of the market that could benefit the new presidency. So Dow Jones Industrial Average closed within striking distance of the 41,000 level, right? I can look at DIA, for example, the ETF. We've rallied pretty significantly here. I don't want to mess this up. There we go. So DJI, the high of yesterday was 12 points shy of that 41,000 level. So buoyed by post earnings, right, surge in UNH, United Health, the index climbed almost 2%, adding over 700 points, marking the best day of 2024 after being on 5 consecutive up sessions, right? Fire, just continuously going to the upside. So we saw cooling in major stock indices, especially on the overnight session. Tech has been in a rut over the past few days, and RTY, or Russell, right, the Russell 2000 has been on fire as well. A notable index that tracks a group of 2,000 small caps indexes, or small cap stocks, I should say, soared about nearly 4%, 3.6% on Tuesday, with multiple massive green days exploding higher from this range-bound area. So we've made new highs of year. I think we've made a new multi-year high. The last time we've traded into these areas was 2021. So quite the play here, advancing about 11% over the past 5 trading sessions, which is the largest move on the index since April 2020. So it's very, very close to that January all-time high level. Russell 2000 earnings are due to be very favorable compares against the same quarter of 2023, according to a few analysts. And this means mean reversion for SPY and triple Qs, right? There are better investments elsewhere. So commodities, just like these other small caps or these other neglected names, have been running into highs as well. Precious metals and miners scored some big gains as gold futures settled at an all-time high following comments from the Federal Reserve officials that ramped up expectations for the first interest rate cut happening in September. And front month COMEX gold for July delivery rose about and closed about 1.6% to 24.62 or so an ounce on Tuesday, while the front month July silver finished up with 1.7%. So you can look at the futures here. SI futures, they rallied a decent bit, but they're not on highs of year, unlike gold. So Citi analysts said that prices for the yellow metal keep surging all the way to $3,000 an ounce as financial flows show potential for significant expansions. And they add that the weakening labor market and broader trend of disinflation are bullish for gold and silver into year end, which is something that I'll be looking for. I want to see commodities continue their gain over the next few weeks and months to wrap up the year realistically. I don't necessarily think that we're going to start falling in indexes, right? I don't think that it's time for everything to start just getting sold off like the S&P, NASDAQ. I'm not necessarily like giga bearish on this. Remember, seasonality proves that July is typically a month that does close green. So I can see a little more downside coming in. I think they just want to mean revert into an area that has created a very big balance on the S&P and the NASDAQ before we can continue higher. Because if we look at this over the past few weeks, after we've created such an expansive move to the upside after that holiday week from the July 4th week, right? We've created multiple green days to the upside, and as of most recent, we've seen very large swings into this high, where I think that prices would want to revert to a very large distribution area, which happens to be under that 5570 region, right? Within this 5500 region, 5570 region, I think that price wants to revert back into an area like that to get into a region that's more balanced before the next potential push. What we have here on the NASDAQ as well, on the futures, same thing. There's a lot more weakness on the NASDAQ. We're coming into an area of interest as well, this larger distribution that spans all the way down into that 19,800. Now, I don't necessarily think that that's going to be a major target, but closer to 2,000 and a bit lower into these 19,000s, 20,000 and 19,000s is a general target for this quote-unquote mean reversion as rotationary pressures continue to cycle, and we're seeing outflows in big tech. Now, obviously, we do have earnings over the next few weeks that could completely change a lot of these aspects, but I think that those earnings are going to come at a time where the markets have already pulled into an area of balance, an area of reversion, so they can potentially continue on to the upside. So, as I'm looking at the S&P 500 futures today, to start things off, we've got a huge amount of volume that's being created into these lows. And what I'll be looking for on the day, or to start the day at least, is if there's going to be sell pressure in this market, I think that they want to kind of allow for pops to get sold into. So the first area that's already tested and got offered was around 56, 65, 68 on the S&P. The last area I want to be a seller at is 56.80 to 84 region into this low volume. That's the last region where I could see these sellers come in, so we can go and trade into that 56, 44, 45 area. But there is a lot of volume into this low. We're outside of a distribution area to the downside. There's some bear pressure, but I think the first move is going to be a stop run to the upside, some take profit to the upside, and then we want to see how these sellers want to calibrate price as we get into areas of imbalance higher. If we take a look at the imbalances that were created on the overnight, we have very extended delta that I'm going to be looking for, especially these like clusters of red delta and these like larger extensions of imbalance into that like 56.80 area. I'm going to be looking at that as like a last chance for these sellers to come in. As prices are shaping up right now, they're getting very imbalanced into the lows, and we moved from all-time highs down about 50 points on the overnight session on the S&P. So the first move, right, there's a high probability that it does try to swing up a little to get people to take profit, take some stops out, and then find some better sellers if this thing is going to continue the momentum. It continues the momentum under this like 68 area, 65 area, especially under the distribution under that 46. So that's what I'll be watching for today. If there's going to be downside continuation in these markets, they're going to happen from from higher levels realistically, rather than people trying to sell into lows. So pops and drops, that's kind of what I'm looking for to start the day session today. That doesn't mean that you can't necessarily find a long opportunity into these lows on either of these markets, right? Keep that in mind. NASDAQ into a distribution high right now. It's not out of the question. It's just how far can they go on this bid, right, before they attempt to sell. So if they can't sell at like 56.80 and we kind of just continuously try to bid this, you're not going to see too much sell pressure. They have areas to sell, and they're going to be at pops, right, but not too aggressive pops. So let's open up our live trading room and take a look at what that looks like and a full breakdown of what I'm trying to do today. So I'll see you guys in there, and we will wrap up the week. We've got 2 more days into the end of the week, and we'll see if these sellers want to come out, something that I was looking for on Monday. We'll see if they want to come out into the end of the week now. So downside looks like the right side until structural changes happen, and let's see where that is while we open our live trading room. So I'll see you guys in